One of the most powerful tools to motivate staff, especially in a budding startup or even in a more developed kind of company, bringing on senior staff, is an employee share scheme of some sort. In Australia, it's very popular to have an employee share option plan instead. It is a lot easier to implement. There's less hurdles to do. But you need to understand the tax consequences of those rules, because I've seen these go really wrong and the staff get gifted a very large tax bill. So the broad options is you can either have an upfront taxation scheme where they're taxed on the discount of what they have paid for the securities and what they are worth on that day. Or there is a deferred taxation scheme. And a deferred taxation scheme does the same thing. You look at that discount to market value, but you do it at a later point in time. If you're in a business that's going to expand rapidly and grow rapidly like a startup, then you want an upfront taxation scheme, there's no doubt about it. There's even more concessions for a startup business called the startup concessions, where you can basically give ESOPs away to your staff for almost nothing. That's really good for giving some of those very early staff enough equity so that they can justify leaving their very high paying jobs usually for the lower paying job and take a big slice of equity as well. But if you can't get those concessions, you've got to look at other options. We've got loan funded schemes, we've got premium priced option plans, we've got flowering option schemes and deferred taxation schemes. There's an $1,000 discount scheme. There's all different flavors. But if you're looking to motivate your staff and you don't have the cash, particularly because COVID has ravaged many businesses, but a lot of them still need to expand or die, then you need to start looking at giving equity away.